Good morning, it's Jeffrey Cohen. How are you today? It's Thursday, October 26th. It's an inflection point in the markets. By the way, who am I? I'm Jeffrey Cohen. I'm president and founder, CEO, investment advisor representative for U.S. Advanced Computing Infrastructures, Inc., an investment advisory firm registered with the state of Illinois and with the Securities Exchange Commission. Also a technology-oriented consulting firm. And lately has been focused primarily on the markets and running quantitative models and trying to see the future. My image I had in mind this past week was of Poe doing the whole, karate thing because it felt like I was, gracefully moving through the markets, making profits. It was great. But now I realize that markets changing, and whatever I was doing before, I no longer feel like the Dragon Warrior. I now feel like this guy. This guy sitting, having coffee with his cat, his wife, kids, eating peppers. And so that is not the image of the guy who knows the whole stock market. Now, when things are great, I get my AC/DC look on with my Jimmy hat, my Puerto Rican shirt. This was me posting a few days ago that war has a bad impact on stocks, and it's true. And so something happened yesterday, and then there's the whole, image of time is an illusion. There's only the now, except when you trade options or futures, and you realize it's all about time. And there is no now. There's only a movement through time. And this all gets very confusing to me. So we're going to share some stuff, right? And so first thing I want to talk about is how we have an experimental spreadsheet of all these different things that matter to the market, right? We have stock price volatility, expected returns. We get the VIX, which is the price of volatility. We have all the different currencies, commodities. We have financial things like mortgage rates and secured SOFR, secured overnight financing rates we look at. We look at treasury long bonds. We look at real interest rates. But we try to find a way to look at it so it's easy, right? I could look at high yield corporate bonds. I could go to Wall Street Journal. SWSK. Wall Street. Thank God I didn't type something weird. Wall Street Journal, bonds. I have a bond benchmark page I like. And we could get in here and we could try to figure it all out, right? So, AAA rated corporate index, right, is down 0.7. That's not a lot. It's not a lot. It's less than 1% change. However, when bonds go down, yields go up. And so the question is, right, why are companies paying more, right? And all of them. High yield constrained, high yield CCC, high yield 100, which are popular distressed bonds. Everything is a big fat. Look at it, long term. Long-term bonds down 1.5%. Those are major changes, right? And so I could look at that, or I could look at the HYG. Got to find it. I'm so sorry. High yield corporate bonds. I can make this bigger for you guys. We're going to go 200 here. High yield corporate bonds, 72.2. And my guess is if I were to pull up just a delayed quote, Yahoo Finance, where are we with high yield? You can see the 72.2. I got set up to pull the data directly. Look at it over the 5 days, and you see it's actually had a bit of a recovery. But if you look over the year, you see it's choppy, right? Choppy, and unfortunately, high yield bonds since September 11, go back to August 28, September 11, doesn't matter. You can see they're down 4%, right? So you're buying bonds and they're getting worse. So let's go through and see if there's a trend here. And I think you're going to find that there is a trend here. You're going to see that yesterday, at least, Bitcoin went up through the roof. Bitcoin's at 34,000, right? That's crazy. But most of the bonds that you might look at, right, bonds are down, so yields are up. VIX is up, meaning the cost of insuring your portfolio, or the cost of options are up. That's not good. So let's go take a look. So lots of things crappy in the market. And so we're going to look at the top 10 drivers. We updated this yesterday. Jeffrey, what were you doing yesterday? Why were you updating this? Well, to be honest with you, I don't know. I was disgusted by the market yesterday. It fell because Google, Alphabet. What the hell, man? It's so funny, right? Because it doesn't really make much sense. So Alphabet has been just this tremendous performer. If we go by the week, right? And we're going to draw a line just to show you. So it's just funny because I don't know. Let me get a trend line. And we'll just go here, right? So there's your trend line. And so Google sure looks like it's going to be doing great here, right? Like it's been going up a lot, came down, went up. And the reason that it dropped yesterday, at least what I remember reading, was their cloud platform, Google Cloud Services, didn't grow as fast as it should have. But everything else looked great. And so it dropped 10% yesterday. Look at that drop. But when you look at it in the context, you look this year, it was at 88, and it's almost doubled for the year. So sure, Google, right? A lot of money went into Google. So now it's down. Now who knows what it's going to do? It looks like it's going to be down another 2% in pre-market. So that worries me. It worries me for a few reasons. It worries me, why did it go up so much? I mean, it's down, but now it's up, right? Up, down, up. Why did it do that? And so now it's correcting, but it's not a big correction. I look at this now and I realize when the stocks are going up and down by 100, 200%, it's, who knows, right? And so we have a number of stocks of interest that we're following. That's actually not as interesting right now. So let's go back to the futures. So right now, S&P down, NASDAQ futures down. What's interesting is the Russell futures are up. So what do we think's going on with the Russell? Where's my model output? I ran the model last night. I ended up double checking the data. I was uncomfortable with what the data said, what the model said. So I'm like, can't be right, Jeffrey. So let's take a look. We're also going to show you, we're going to work with the spreadsheet too. This is a crappy video. I'm so sorry. If you're watching this, you're probably like, Jeff, get to the friggin' point. You're rambling. I think the issue is I'm rambling because this market's crazy right now, and I don't know what to do with it. So if we look at the market cap, all the stocks, it's 47.8 trillion. Jeffrey, 47.8. What was that number yesterday? It was 48.7. So the market fell 2% yesterday. It fell $900 billion yesterday. So that feels like a blog post to me. Because I don't think anyone realizes that the market fell $900 billion yesterday. President Biden, right? President Netanyahu, President Putin, whoever the head of the Iran is. You guys all got to realize when you go to war, war really messes up the stock market. You're hurting my business, guys. Cut it out. October 26, 2023. Continued. So the first thing to realize is stocks that we run in our model. So that there's data subject to data validation, right? We need stocks that trade every day. We want stocks that are listed on U.S. stock exchanges. We don't want preferreds. We don't want warrants. We just want good old-fashioned common stock, right? Fell 2% yesterday. Or, just to be real, 900. That's how much stocks fell yesterday. $900 billion. And lost U.S. stock market capitalization. I lost money yesterday. I did. Because I got out of my short the day before. I was like, oh, this is great. I made a profit. Yeah, I would have made more profit. But I also realized that I am not going to be the guy who can predict the future. I came to that realization yesterday that I shouldn't beat myself up for not being able to predict the future. Because you know what? If I could, my wife reminded me, Jeffrey, if you could predict the future and stock market changes, we'd be multi-billionaires. And you wouldn't be doing it. But you would be doing it because you'd want to be a multi-trillionaire. And it's crazy. You can't predict the stock market, guys. Don't beat yourself up if you take a profit and then you left a little money on the table for the next guy. Because it's just what it is, right? So, where are we with futures? So the Dow, it looks like it, or Dow Jones Industrial Average looks like it's flattened. S&P 500 is down a quarter point. The Russell's up. NASDAQ. So it looks like the market has decided to claw its way back from the precipice. Dollar's up, which is bad for stocks. Dollar's up because I believe that there's some war fears. War is bad for stocks. Bonds going up means yields go down, which is good for stocks. The VIX looks flat. That's good for stocks. But there's a lot really under the covers that we uncovered in our model that I will hopefully get to in this video. You know what? It's been 13 minutes. Go ahead and ask me anything. I'm going to talk to you, okay? So stock price volatility is actually down. So this is important for you guys to understand. This is the number one important thing in the whole model. When you look at the variance of the S&P 500, it's 1.8 times 10 to the negative fifth. It fell. So stocks are entering a period of calmness. Now, if I were to look at a chart of the S&P 500, you'd say, Jeffrey, I don't think so. I think the S&P 500 has fallen, and I think you're a big fat knucklehead. But truthfully, you can't say that, right? Because what's happening is the S&P 500 is calm. I'll just draw some horizontal lines to show you. Or I'll draw it like this. It's pretty calm and it's going up. Now it's going down. So you could say, well, Jeffrey, directionally it's going down. But truthfully, gone up a lot. It's gone down. Could go up, could go down, we don't know. But what I'll tell you is it's moving along trend lines, and it's pretty calm. If you go back, you're going to have trouble seeing this, but I'm going to try real hard to show you. Look at the size of the candles. Okay? And we're going to make the setting, we're going to make sure, yeah, it's logarithmic scale. It's fine. So that means it's more like proportional. So a really fat bar like this one, when the market had a high of 41.58 and a low of 39.19 and it moved 200 points or 5%, and it was up 3.64%, that's a lot of volatility. That makes me clutch my heart and hope I don't have a heart attack and roll around on the floor. But I'll look at the big move yesterday. Oh, Jeffrey, we had a big move yesterday. The hell's 8.6%? This must be for the year. So we're going to take a look there. The market had a high of 42.04. What the hell am I looking at? It's days. Is that really all it moved? You had a high of 42.04 and a low of 41.71. It didn't move at all. It's like tiny moves. Look at that. 43.66, 42.92. That's 60. That's a really bad day. 74 basis points on a 4,200 index. It's a 1.5%, to almost 2%. Oh, the crescendo of selling, and it moves like less than 1%. And so what's happening is your moves are smaller. Your market is calmer. Now, you could argue it's because of a lot of options are out there. 0 day to expiration options allows people to buy and sell daily volatility. You could argue that the S&P 500 and the QQQ are synthetic index financial contrivances that have very low volatility because they're market cap weighted, which means the largest stocks, which are hardest to move, make up the most of the index. You can argue a lot of things, but what I got to tell you is all those things were true roughly a year ago. And they were definitely true 6 months ago. And so what we're seeing is we're seeing smaller movements. We're seeing less money in the market. We're seeing less risk. We're seeing less aggressiveness. We're seeing less fear. If the market's falling from 4,600 to 4,200, that's almost a 10% drop since July, August, September, October. 3 months, 10% drop. Annualized basis, 40% drop. Oh my God, we're all going to die. Can't pay for college. Can't buy a house. Can't buy a car. Can't even buy food. But it sure seems orderly. Now, that's good, actually. Orderly stock market movements make people less afraid, and they reduce, at least theoretically, they reduce the amount of expected return people need, so they raise stock prices. They raise the potential for stock prices. So that's the one thing we saw. Now, that's a lot of talk. But let's see where we're at with the stocks. The historic volatility of all the stocks in our model. That's the real secret of our model, by the way. The real essence of it. It's not the Koleski decomposition testing our matrices. It's not simulated bifurcators. It's not particle swarm optimization, although those are cool. It's not solving our equation on quantum computers, which is interesting, but largely irrelevant. It's this. The Chicago quantum power, the net score power, is 5.34. The market is still very confident in its direction. And the variance of all the stocks, so getting out of the index, is 3.471 times 10 to the negative fifth. It's been in a downtrend for a long time. What do you mean? Well, if we go and look at stock price variance, which we've been posting research, we updated it yesterday. The S&P 500's variance was 3.8 times 10 to the negative fifth, May 5th. It's now 1.9. Volatility is half since May. This is the S&P 500, so nothing's really changed. It's very precise. It's comparable. All stocks. Now, in May, we had 3,400 stocks. That's because everyone was printing up new stock certificates. It was great. It was like you could hear the printing presses going off, and the Mavens and the SPACs and the hedgies and all the IPOs, and everyone was like, hey, let's create new crap to sell to investors. Well, now you're down to under 3,000. So you're down 13, 14% in the number of stocks. Who talks about that? I haven't heard anyone talk about this. Number 2. There are 14% fewer U.S. listed stocks, common stocks, than there were on May 5th. That past data validation. So there's many fewer stocks. That's just super interesting, right? And the other is, take a look at that variance. You were at 6.3, you're at 3.5. And where are we at now, Jeffrey? You're at 3.47. So we're heading to 3.4. Stock market actual or historic volatility is down for the year. Down significantly, as in 40% or 50% on a comparable basis. So, and we were tracking it, it was even higher. It's crazy. It's crazy. So that's interesting. This is very bullish. I would say this is bearish. I would say the fact that the stock market went down $900 billion yesterday is bearish. But it doesn't mean it's not going to go back up again. It just means it's lower, right? So what else did we see? I'm scared to death of this market right now. High yield corporate bonds are down. It's a downtrend. Real estate values are down, but it's choppy, so they're up and down. Metals prices are up, but it's choppy up. These are the ones that are economically sensitive. So that means the economy's fine. Energy prices, flat, but choppy. That's not bad either. That means we're treading water with the economy. US dollar, flat, choppy. Gold price, up. That's a fear index. But it's an ancient fear index. Do you know we used to keep 3% of our net worth in gold? We don't do that anymore. There's people that want to keep X percent of their assets in Bitcoin. We do not touch crypto. Sorry. Okay, long bonds. Long bonds, real interest rates on the long bond basis, mortgage-backed securities. They're all down. Interest rates are up. Interest rates are up on houses, on a real basis, and on a nominal basis. Crap, that's terrible. Where are we at today? We go to the U.S. Treasury's CME group. This is live data. It's delayed, but it's live. It's good, right? And we look at all the different Treasury products. 2-year note, 3-year note, 5-year, 10-year note, ultra 10-year note futures, bond futures, that's 30 years, bond futures, that's 20 years, and ultra bond futures. And they're all higher, which means yields are lower this morning. Hey, it's great. Hey, we're the monkeys. Better stop monkeying around because stocks are going to go up when interest rates go down. But what I worry about is I read a couple days ago, it was a couple of hedgies and bond desks, fixed income desks, that drove the treasuries in the first place because you could put a lot of leverage by just trading futures and options. And so, okay. So they're unwinding short bets. They're buying them. It's great. Treasuries are up a little. How about the VIX? Where are we with Jeffrey? Where are we with the VIX? Well, the VIX seems a bit elevated. We remember when it was 13 not long ago. And now it's higher. It's higher. It's 20, 21. Now we look intraday, and we see it's been down, right? So I'm not sure what that means, but because I don't think it's relevant. But we look at the VIX. There it is. I remember in June it was like 13. It was 12.9. Oh my God, I love it. 12.9, 12.8. 12 handles on the VIX. You're at 20. You're at 19, 18. So VIX is elevated since August or since September because people have been afraid. And I think that's a war premium right there. If I could take a snapshot of this, I'm so sorry. VIX folks, I can't do this. I have to get their name in there. CBOE. I want to give them the credit. And they won't take it. All right, fine. Take a snapshot. This is 1 year. And my guess is that last little bit is the war premium. I wouldn't underestimate the impact of war on U.S. stock prices because nothing else really makes sense to me. The U.S. federal government cash intake is so interesting. There's less liquidity in the market. They've cut $185 billion out of the market. This is both Treasury General Account and total treasuries held by the Federal Reserve Bank. And do you know the 2 weeks before, less liquidity by a quarter of a trillion? It was 258 billion. So you got 258 billion, you got 185 billion. You're just sucking money out of the economy, and the U.S. federal government continues to spend and not tax. But it doesn't even matter if they tax or not tax. That's not the relevant point. What's relevant is elements of the U.S. federal government are draining liquidity out of the system. That's bad for stocks. Lastly, Bitcoin is up dramatically. Huge upswing. We remember Bitcoin was under 20K. It's 34K. Bitcoin pulls, it's like lottery tickets. It's pulling dumb money out of the market. I would much rather dumb money goes and buys the Russell 2000. At least put the money in stocks. It doesn't really matter where they put it, but that's sucking some money out. So whatever money's going into Bitcoin, think of it as it's the same as federal cash intake or gold. When money gets into gold, it just sucks out of the market and into like something that's not liquid. It doesn't matter. What matters is it's just pulling it out. And so this is hugely bearish. The whole system is bearish, except for the fact that the U.S. dollar was flat and economically sensitive metals were flat. And the fact that stock price volatility is still coming down. So it's a lot of negativity out there. I'm worried, by the way, by the negativity. So, what did we see? The turn towards risk off, okay? I'm going to walk through 4 points that I made. I don't know that any of this shit makes sense to you. Now, the reason I'm making the video is I'm not trading this morning. And why am I not trading this morning? Because I've been making money in the market, but I've been feeling really uncomfortable with where we're at. And yesterday we lost money. Yesterday we had a bad day. We didn't lose a lot. We didn't. But it was a tough day. It felt bad. It felt bad to me. It still feels bad to me. I'm not sure I understand where we're at. And so I'm just going to wait it out. And I'm going to talk to you people because I love you people. You're my favorite people. Let's see how the market opened. The market opened with the Russell higher. All right. I like that. Real estate's up. I'm not going to argue. Bitcoin's down. So we're going to unwind a few things. Gold is down. Treasuries are up, so interest rates are down. Tips are up, so real interest rates are down. The market is rolling back some of the chaos this morning. So, the market at open. First 3 minutes is rolling back yesterday's movements. A little bit. It's good to know. So what else did I pull up on the screen? So where are we going to be with Google? And what's going to be the story with Google, right? We'll see. We'll see. I'm not sure. I'm not sure the story with Google, but probably can't hurt to have a little correction as long as it doesn't damn the rest of it. So let's look at, we track a group of stocks called our application platform portfolio. And by the way, I want to make a point that from a compliance perspective, we have one stock position right now. Everything else is hedge funds and indexes and bonds and stuff that we don't touch, right? Stuff that probably has an average trading. So 96% of our net worth has a trading frequency measured in years. This is how we roll. 4%, yeah! Let's go crazy. Let's go crazy. It's probably more like 3% right now. But let's go crazy. 3%, let's go crazy. Let's have a lot of fun. 97%, we're not moving. And so application portfolio is another way of saying e-commerce. It's another way of saying new economy. It's things like application modernization, application monetization, games, gambling online, all the kind of stuff that you look at, right? Sophie, a new way to do financial services. It's like Fiserv, but it's e-commerce. It's funny. You would think Fiserv would just buy them, right? SoFi Stadium, right, where Taylor Swift posted her movie. Oh my God, I felt so happy about SoFi. I wanted to go out and buy some stock because I was like, yeah, they got a whole stadium named after them. So we look, and some of the worst names, right, like TTD, Trade Desk, Pins, Meta. This is an advertising agency, Google, IGT, DraftKings, online gaming, Roku. They're down. Roblox, Microsoft. But then you look at what's up. Affirm Holdings, which is a subprime lender. Love that. Buy now, pay never. Pay later. Skills is up. IAS Apps, which is Digital Turbine. And so some of these stocks look interesting, right? Now, I could tell you what the stocks are that are picked by our model, but I'm going to keep it simple here. So go back to the VIX. Intraday on the VIX is down. People have decided, yeah, we're probably going to be fine, right? Probably going to be fine. Okay. First off, I'm going to post this so I don't forget what I have out there. So I still think war is a huge factor in stock market. Let's do a quick look at CNN. Let's see if any tanks are rolling. Yeah, I'm really upset about this main thing. It's so stupid. What about Ukraine? Does Ukraine even show up anymore? So where are we at with... Yeah, Hamas still has supplies, right? Overnight raids, only the beginning, humanitarian crisis, hostages. I don't know, guys. China is going to give $2 million in humanitarian aid to Gaza. I got to tell you, the second largest economy in the world. China already gave $1 million. They're going to give $2 million. This is like damning someone with faint praise. China is on the side of Israel when they give $2 million, total of $3 million, to the Palestinians. My guess is China trade with Israel is probably measured at well in the billions. The EU is supporting Israel. Here's the thing. They blew up a few buildings. This was interesting. This was the video I thought was important for you guys. So Israel's coming in with a few tanks and a bulldozer. And the bulldozer has been hit by a missile. So what they're saying is Hamas is still an active, valid military opponent. And what I understand is that Israel's coming in to try to find some of the tunnels that are going into Israel. It's a small operation. And then the soldiers exited Gaza at the end of the activity. They're not occupying. They're coming in, they're cleaning up, and they're getting out. Australia, 15 million aid in Gaza. So Australia's not really on the side of Israel here, but who knows what's going to happen. Israel's allies fear it could be walking into a trap in Gaza. Of course it is, right? So if I were to pull you up a map and I were to show you the U.S. military bases that are being shelled right now, we had 21 American soldiers injured in Iraq, like a week ago, and largely by Iranian missiles. And so Iran is attacking the United States. Russia knows because Russia said, look, you guys, it's the whole thing. You're walking into World War III and you're walking with your eyes wide open, right? Don't do that. Nobody wants that, right? Let's look at Ukraine. What's been happening in Ukraine? A lot of nothing's been happening in Ukraine. Where's the Ukraine story? Does CNN even show Ukraine anymore? Is it like a thing? I think Ukraine fell off the list. Holy crap. Guys, this is so weird. The only Ukrainian story is they got, like 10 guys learning how to fly jets. Are those F-15s they're learning how to fly? Maybe. We got old F-15s from Vietnam and we're teaching the Ukrainians how to fly them. I don't know, guys. Maybe on the positive note, we do have a new Speaker of the House. That's good news. Update. No, not publishing post. I just want to make the updates. We have some good news. Maybe we should talk about some of the good news. We did elect a new U.S. House of Representatives Speaker of the House. And his name is Mike Johnson. Republican from Louisiana. A conservative and relatively new member of Congress. A breath of fresh air. And he passed with unanimous consent of Republicans. That's exciting. That's good news. That's bearish. I mean, that's bullish. So, I don't know. I'm not seeing anything with the world here. No war. I'm so thankful that the Israel didn't do its ground offensive. Just on a personal note, I think it is a trap. I think it's a huge trap. I think it has nothing to do with Israel. I think it has everything to do with the U.S. And so I think Russia versus Ukraine, I think it's going to become old news, but I think they're still fighting. I don't know. Let's see what Reuters has to say. I'm looking at the stocks that I want to trade, and I realized, yeah, probably looking at some big moves here. But for right now, I'm just taking a wait and see attitude on this whole thing. I have to wait. I have to wait. I don't understand the market today. And so it's just a little bit crazy. So the Israel thing's a red herring. Take it off the front page. It's not relevant. Well, that's interesting. U.S. economic growth accelerates into the third quarter. ECB, European Central Bank, keeps rates on hold. U.S. Speaker. I mean, of course, Treasury yields threaten long-term performance of stocks, but I don't want to hear about mass shootings. No, thank you. Russia with North Korea. That's always interesting. Russia continues to invade. Pakistan says get out. If you're an undocumented alien or refugee, you're out. No refugees in Pakistan. They only get to come to the United States. Now that's interesting. France sends a helicopter carrier to support Gaza's hospitals. So this was also a big deal. And I don't know that it gets the right call out, but you have massive damage in Acapulco. I remember vacationing in Acapulco. It's nice there, but look at this. They trashed the whole place. Who did that? A storm did that. 27 people died. People are missing. All communications were down. Power was down. It's a Category 5 hurricane that 24 hours before was a tropical storm, maybe. And it really, really sped up. But you've got a massive set of damage there in Acapulco. In fact, let's look at what the NOAA has to say about it, right? It's bad. It's really bad. So where is... No, where's the Mexico thing? It hit, but they're not showing it. Is it because it already passed? Wow, it already passed. It's done. Well, we got Tammy. Post-tropical cyclone Tammy, 75-mile-an-hour winds. Okay. It's not bad now, but that was a really bad storm. Otis really smashed into Mexico. And so I didn't think that was very good for stocks either. So let's come back to the close here. So, I'm looking at things and I'm really wishing that I knew which way the market was going and that there was confidence. So I don't have confidence. I'm not sure where the market's going. I'm sure if I put on Bloomberg, it'll tell me it's a half of this and half of that. So let's take a look. FinViz. The Russell's up slightly on a delayed basis. S&P 500 and NASDAQ are down. Telephony is down, but it's more in the cable, so people must be cutting their cable. Energy's down. Healthcare's down. MasterCard and Visa is down, which means there must be more data about subprime lenders. Google and Meta down. That's always interesting, right? So those guys are down. News? Anything interesting? Yeah, U.S. economy grows at the fastest pace in 2 years. U.S. economic growth accelerates in the third quarter. GDP, Bureau of Economic Analysis. BEA GDP, Gross Domestic Product. The advanced reading on Q3 is that our economy grew by 5%. There is no recession. Guys, there is no recession. We did great. Economy's doing great. U.S. is doing great. And so, all right. All right. I love it. That means real economy's doing fine. This is a big deal. So, maybe the volatility is down because people realize it's going to be okay. GDP is doing fine. Maybe that's going to require some discussion later, right? U.S. GDP grew 4.9% in Q3. The U.S. economy is fine. And that's it. That's good news. That's good news. That's good news for a lot of things. And so maybe that's the story here. The story is we got a threat of war. Got a lot of chaos in the stories, but at the end of the day, the economy's doing fine. And so that means I don't know that I'd be shorting everything. I don't know that I'd be long everything. I would just kind of, it's touch and go. And so that's where we're at. I want to thank you guys for watching. Appreciate it. Love my listeners. And if you want me to talk about anything, now's the time. Just type it in the chat. I'll, if you got any questions, AMA. You want to talk about stocks? You want to talk about individual stocks? That was a good time. I love talking about individual stocks. And so while I look at the fact that gross domestic product grew at 4.9% last quarter, that's terrific. That's terrific. That's terrific. The economy grew, right? Nothing wrong with that. Fastest pace in nearly 2 years. However, market continues to drop because the bets are that strong economy will actually raise interest rates, even though the European Central Bank did not raise interest rates. And my gut tells me that if I go to CME FedWatch and I look at the FedWatch tool, there's a meeting. So smart money suggests that the target rate, which is currently 5.25 to 5.5, will still be 5.25 to 5.5, but 2% of the money is betting on a cut. Now, let's be honest. They start cutting interest rates. U.S. stock market's going to scream higher. So we got out of our short bet, and maybe we were dumb because I'm looking at it. It's down another 2% this morning. But pigs get slaughtered. I made money on my short bet. I don't know. All right. We are going to end the call. Thank you, guys. Good luck in the markets. If you want to learn more about Chicago Quantum, U.S. Advanced Computing Infrastructures, Inc., please check out our website, chicagoquantum.com. And if you'd like a free consultation, I have my cell phone handy. Give me a call, 312-515-7333. I'll make sure the ringer's on. And Check out our website, chicagoquantum.com. Email Jeffrey at quantum-usaci.com for an appointment. If you're an Illinois resident or you're currently residing in Illinois, then we can handle an unlimited number of clients. If you're from outside of Illinois, we're allowed 5 per jurisdiction. So reach out. Time is short. Thanks a lot. Good luck in the markets. Bye-bye.
Are you done?
Just finished. Yep.